And now, ladies and gentlemen, let me introduce our chief guest for the occasion, Shri Sanjay Kumar Agrawal ji. A very warm welcome, sir. I request you to kindly come forward and address the PhD Chamber of Commerce and Industry and participants. And we are indeed grateful for you sparing your precious time for all of us.
Thank you, Smriti ji. Shri Saket Dalmia ji, President, PhD Chamber. Shri Bimal Jain, Chairman, Indirect Taxation Committee of PhD Chamber. Shri Sanjay Agrawal, Dr. Manish Gupta, Shri Saurabh Sanyal, Secretary General, PhD Chamber. Participants in this seminar, ladies and gentlemen, a very good morning to everyone. At the outset, I would like to thank PhD Chamber of Commerce for inviting me for this conference and giving me an opportunity to share my thoughts about the initiatives which the government has taken for easing the life of businesses in GST compliance. 6 years have been spent after the rollout of GST. And during this period, GST Council has met 49 times to look into GST issues. This shows the dynamism with which the issues and challenges are being looked into by government in a cooperative federalism approach. And in this background, today's theme, Ease of Business and Challenges, is very apt and will draw a lot of curiosity and interest. This is what I believe. There is no doubt that there is a paradigm shift after introduction of GST in the manner in which indirect taxes were collected from businesses in our country. GST has made the movement of goods borderless as far as taxation is concerned. To keep the thing simple for interstate trade and for accounting purpose, integrated GST, that is IGST, has been introduced, which is a unique concept, and I think adopted for the first time anywhere in the world. As is expected from any modern tax administration, the filings have to be provided online for either returns or for taking any registration of any kind of communication. That has been done with the introduction of GST on a common portal known popularly as GSTN. And the communication from the department, tax administration, is mostly being made through email, and that communication which go from the central tax department that bears a DIN number so that the receiver can check its authenticity by visiting the website. And now it is being introduced in the communications which will go from state administrations also. The refund in case of exports, which used to be obtained from the central excise formations, now is dispersed through customs system in a seamless manner in almost all the occasions, barring few cases where the taxpayer is identified as risky because of his supply chain. And in case of imports, earlier it used to be SAD, special additional duty, which was not available for the traders as a credit. Now that is available, that in place of that, IGST is paid, and that is instantly available as ITC for the businesses. So as far as taxation, indirect taxation is concerned, now there is a seamless ITC chain for imported goods as well as for domestically produced goods or goods in trading across the borders. So this has really made the life simple for the taxpayers. And all this has led to a growth in taxpayer base. And now there are many more taxpayers as compared to earlier regime of central excise, service tax, and VAT. There, at that time, there used to be total 64 lakh taxpayers. And now the numbers have grown to 1.4 crore taxpayers as of last month. This kind of framework, which I just now mentioned, has thrown up huge challenge for tax administrations in terms of ensuring compliance from the businesses. Because earlier there used to be many kind of forms which were used for interstate movement. Now those all have been done away with. And it is an invoice which is issued by the taxpayer himself for payment of IGST. On that, credit can be taken in the other state. And to ensure that the smooth transition from old system to new system, the self-policing approach, which was envisaged in the GST, that what supplier is supplying, what will be reflected in his return, what will be reflected by the buyers, all will be cross-matched. So that was the self-policing approach which was envisaged in GST. That was not immediately rolled out. Otherwise, it would have put a lot of compliance burden on the taxpayers. And in that place, a simplified system of return filing was introduced. But that has posed another type of challenge. And that has led to many unscrupulous elements and entering into the ecosystem. And they were there in the system just to seed fake ITC. And that lured even the genuine taxpayers in their evil design. And this started the struggle for the tax administrations as to how to eliminate such elements from the ecosystem and to make the system pure again. As the taxes are collected by the government to run the country, maintain its sovereignty, fuel the infrastructure development and growth of economy, and that all for the betterment of the life of its citizens. Therefore, any leakage in revenue needs to be plugged with complete resolve. And in the process, genuine businesses who got lured for discharging their liabilities from fake ITC also had to face consequences. In my interaction with businesses, I have realized that there is an innate desire to be compliant. However, sometimes circumstances and sometimes the greed led to non-compliant behavior. Here, the role of tax administration comes into play to ensure that system is so designed that anyone thinks twice before indulging in any malpractices. Moreover, if we keep the system very porous and loose in design, that leads to graver consequences, as subsequent enforcement action, which is taken by the administration or tax department, is more intrusive in nature. And to make the whole ecosystem secure by design, certain validations are required to be introduced in the framework, and which precisely the government is doing. In that line, restriction has been made on filing of GST-1 if the taxpayer fails to furnish the GST 3B return for the preceding period. Amendment has also been made to limit the ITC availment to the extent of the details of such supply which has been furnished by the supplier in his GST-1 return and which appear in the taxpayer's GST-2B return, which is generated by GSTN. There is no need to file GST-2B, it is generated automatically by the GSTN. And to encourage self-discipline and self-compliance by the taxpayers, provision has been made for intimation of the difference in liability in GST-1 and GST-3B for a taxpayer to the taxpayer on common portal, for enabling the taxpayer to either pay the differential duty or explain the reasons. We keep on receiving representations from industry bodies regarding inquiries extended to their members by the department in case of detection in fake ITC in the supply chain. And that is very common. And you would agree that for ascertaining the facts, such inquiries are unavoidable from the department. But if we make seeding of fake ITC impossible or very, very difficult, then the problem would get nipped in the bud. And towards this end, recent validations have been introduced and should be taken in that spirit only. And I would agree that still something more is to be done to weed out fake ITC generators from the system. And to tackle these problems of entities who are taking registration of fake either on the basis of fake documents or using the documents of others with intention to play fraud, physical verification before grant of registration has been made mandatory based on risk-based approach. And this is helping the department in barring the entry of such fake ITC generators in the ecosystem. And in fact, a special drive has been launched from 16th May for 2 months period. And that drive will be carried out against the fake ITC generators. And it will be in a coordinated manner by state and central GST tax administrations. And the aim of that to identify the fake entities and weed them out from the entire ecosystem. As per the feedback which we have received from the trade and industry sources, these are having positive impact on compliance behavior in entire ecosystem. And the growth in GST revenue can be partly attributed to this aspect. And entire trade community deserve appreciation for their solidarity with the government in this regard. And in my interaction with Mr. Saket and others before I came to the venue, I was mentioning that there are 4 pillars on which there is tremendous growth in GST revenue. One is economic growth, other is nominal economic growth, taking into account the inflation. Then formalization of economy is again making a huge contribution in growth in GST revenue. But we cannot ignore the growth in GST revenue because of better compliant behavior of the trade and industry. And for that, they deserve all the kudos from the government. Many other simplification measures have been introduced for easing the compliance burden of return filing by the MSME sector, such as filing of nil returns through SMS, staggering of dates to avoid crowding on the last date of return filing, and most importantly, the introduction of quarterly return monthly payment scheme for taxpayers with annual turnover below ₹5 crores. And about 89% of the taxpayers are eligible for this scheme. And the success of this scheme is visible in 44 lakh taxpayers availing the benefit of reduced compliance scheme. And in the recent initiatives for trade facilitation and ease of doing business, relief is given with retrospective effect on interest to be paid on the wrongly availed ITC when it is availed as well as utilized. The rate is now revised from 24% to 18%. And the process and architecture of return filing in GST has been streamlined and simplified considerably since its introduction. And various returns are linked in such a manner or common portal that filing of GST1 by suppliers enable GSTN to automatically generate GSTAT 2B. GSTAT CB return is auto-populated on the portal from GST1 and GSTAT 2B return. And the taxpayers only have to edit, in case required, such auto-populated entries and file the return. And besides auto-population of GST1 on the basis of e-invoices has made the whole process seamless and very easy to comply. And now this filing of e-invoice requirement will be those who are having the turnover over 5 crores from 1st August. And in order to ensure time-bound disposal of deemed IGST refund claims on exports, as I mentioned in the beginning, that on export side, IGST is refunded in a very seamless manner from the customs system. But wherever the taxpayers are identified as risky, and for timely disposal of their claims, a provision in law has been made and functionality has been created in the system for transmission of such claims to the jurisdictional GST authorities for processing in a time-bound manner. And I have taken a stock yesterday, and I have found that barring few cases, all such cases have been transmitted from the customs system to jurisdictional GST authorities for processing. And in order to facilitate small taxpayers by providing them parity on intra-state trade in offline and online mode with bigger entities for supply of goods, a decision has been taken that there will be waiver of requirement of mandatory registration. Otherwise, whosoever was selling the goods through e-commerce operators, they had to take the registration. That requirement has been done away with till the threshold. If their turnover is below threshold, now they can sell their goods through e-commerce platforms without taking the registration. And taxpayers under composition schemes have also been allowed intra-state supply of goods through e-commerce platforms. And as mentioned by Shri Saket Dalmia ji, provisions have been made in the GST Act, and it has been simplified and made, and amendments have been carried out to decriminalize certain type of offences in GST law, and as well as the minimum threshold limit for launching prosecution has been now increased from 1 crore to 2 crores, barring few types of cases for which the threshold still remains 1 crore. And the amount which is required to be paid for compounding of offences has also been now reduced. And now a provision has been made for automatic revocation of suspension of registration by common portal in cases where the registration has been suspended by the portal due to non-filing of returns. And once all the pending returns have been filed, then it will be automatically revoked without taxpayer making an application to tax authorities for such revocation. I would also like to mention the number of circulars and instructions have been issued by the government to provide clarity on various aspects of law and procedure for uniform implementation, and also to avoid unnecessary legal disputes. For that, we should be thankful to GST Council that all such issues are taken up there. First, these are referred to the law committee. They examine the issue, they make their recommendations to the GST Council, and then decisions are taken in a unanimous manner for clarifying the issues to the trade and industry so that there is a uniformity in implementation all over the country. And lastly, deck has been cleared for setting up of GST tribunal in last GST Council meeting. And so far the taxpayers were filing the writ petitions in absence of appellate tribunal. So that will not be required. And once these tribunals are set up with the principal bench in Delhi, and principal bench will be dealing with place of supply related cases, and this much needed relief would now be available to the taxpayers. To sum up, I can say that within the constitutional mechanism of GST Council, the government is taking all steps to simplify the return filing, rationalizing the tax rates, clarifying the issues, and making suitable amendments in the law for managing compliance in non-intrusive manner. And with these words, I conclude and I wish this day-long conference a grand success. Thank you.
And now I would request Shri Bimal Jain ji, Chairman, Indirect Taxes Committee of PhD Chamber of Commerce and Industry, to give his theme presentation to the members and participants. Mr. Jain is the founder of A to Z Taxcorp LLP, tax and law practitioners. He has a vast experience in indirect taxation, GST, service tax, excise, customs, VAT, CST, FTP, DGFT, related matters, etc. Once again, with a huge round of applause, let us all welcome Mr. Jain.
At the outset, let me thank our chief guest today, Sri Sanjay Kumar Agrawal ji, Member Investigation and Compliance Management from CBIC, who has agreed and consented for being chief guest today in National Conference. Our President, Saket Dalmia ji, past President, Dr. Mahesh Gupta ji, Mr. Sanjay Agrawal ji, our ST Saurabh Sanyal ji, distinguished members, ladies and gentlemen, good morning to all of you. This national conference is on two themes today: age of business and the challenges. When we look at age of business, we must recall the biggest indirect tax reform in the country, GST, got introduced on July 1, 2017. With GST, we got four important advantages: that multiplicity of taxes, around 17 indirect taxes and 23 cess merging into one basket. Advantage one. Advantage two: cascading of taxes gone in GST, seamless flow of credit barring two items: 5 specified petroleum product, and of course, negative list block credit under section 17, subsection 5 of CGST Act. Third, double taxation gone in GST, because GST is providing a clarity. A transaction can either be supply of goods or supply of services. Schedule 2. But in pre-GST era, you must be calling certain transactions, they are chargeable to both service tax and VAT, all gone in GST. The foremost advantage which we got, GST is one nation, one tax, one market. I normally say GST law is a Gita, Bible, and Quran. Irrespective of any language, religion, race, and caste, applicable from Kashmir to Kanyakumari. This is called unified India. Why to dispute whether Kashmir hamara hai ya nahi hai? Kashmir hamara tha, hai aur rahega. So when I look at GST, it has unified. Now, language is not bar. Whatever law we are reading in Karnataka, Kerala, same applicable in Delhi, Kashmir to Kanyakumari. And the results are in front of us. Highest ever collection in the April 23, 1.87 lakh crore rupees. Highest ever collection. When you compare this number with the last year, April 2022, it was 1.67 lakh crore rupees. How it is happening? I do recall Sanjay sir has said that what is transforming, we are moving from unorganized sector to organized sector. But this is work in progress. There are so many reform and more reform need to be done in GST. The first one, pruning of exemption list to expand the tax base. And once we are expanding the tax base, then of course, we would be having an opportunity to rationalize the GST rate. 5%, 12%, 18%, 28%. You must be recalling 28% category. We were having around 230 products. Now only 30 products are left out in 28% category. But importantly, there are certain items like cement, which is important for housing for all, 28% leviable. Two-wheeler, required for the Aam Aadmi, 28% category. AC, during this summer of 45-degree temperature, is need of Aam Aadmi. So these products need to be taken out from 28% category. So what is the proposal as a way forward? That 5% rate may be increased to 6 and 7, and 12 and 18 should be merged into 15 two-tier rate. And 28% left out only for demerit goods and sin goods. Then only we will have clarity on rate rationalization. Third, a way forward, inclusion of petroleum product into GST. It is one of the items which is creating cascading, tax on tax. To get seamless flow of credit, it is highly required. Having said that, a lot of ease of business we are finding in GST when we talk about organized sector. Who are struggling in GST, you know? Those who are not willing to come into GST net, unorganized sector. We used to raise cash, sell, no accounting, no books and accounts, and they are struggling. They are not ready to take this GST because this GST will definitely give them a profit element. They have to really understand GST for their advantage. If I look at small taxpayer, I'm going to highlight some of the important parameters because we are going to discuss ease of business, which is the first theme of this national conference. Small taxpayer are being given QRMP scheme, quarterly return, monthly payment. They are being looked after well. If you look at the phased manner of introduction of e-invoicing system, even for the small taxpayer. E-invoicing started from October 1, 2020. Now it is going to be applicable for registered person having aggregate turnover more than 5 crore in any preceding financial year, starting from 17-18, from 1st August 2023. So phased manner. GSTR 9, which is annual return, need not require to be filed if your aggregate turnover is less than 2 crore. You need not require to file your self-reconciliation statement if your aggregate turnover is less than 5 crore. And there's a reduction in late fees also. 50 rupees per day if your aggregate turnover up to 5 crore. And if it is 5 to 20 crore, it is 100 rupees. As against 200 rupees. So we are getting added advantage. And I really admire that interest, which was 24% rate, reduced to 18%, that too retrospectively from July 1, 2017, when credit wrongly availed, and if you have utilized the same. If you have not utilized, interest is not leviable. But my submission to sir, that small taxpayer is struggling on one point. If the delay in payment of tax, rate of interest is 18%. And when we look at the interest on refund, we are getting only 6%. And 18% when we are talking about boosting and supporting to SME and MSME, this rate need to be looked into. So, and in GST, we have to pay the tax even though we have not collected from our customer. So we need working capital to start our business. And if I don't pay GST on time, 18% rate of interest looks little higher. My only humble submission. Coming back to the next biggest roadmap and reform in GST, 6 years of GST, we were all looking for GST Appellate Tribunal. Now this Finance Act 2023 has given away, and Section 109 of CGST Act has been substituted. Now there would be formation of GST Appellate Tribunal. And more laudable steps which is being considered in the law is that there will be equal number of judicial member and technical members. It must be appreciated. And there would be principal bench and state bench. Principal bench consists of president, judicial member, and 2 technical members, one from center, one from state. When we look at state bench, 2 judicial member and 1 each from technical member from central and state. But certain pointers which I would like to draw the attention, because now we are on the verge of formation of GST Appellate Tribunal, and we are having first technical session on this formation of GST Appellate Tribunal. I'm drawing 5 pointers, which is very worth noticing and important, because when we are going to form GST Appellate Tribunal, and that too after 6 years of introduction of GST, what we need to keep in our mind. First, collaboration of center and state to draft proper rules for the GST Appellate Tribunal. Transition from existing tribunal structure to GST Tribunal. We got CSTAT, we got a lot of VAT Tribunal. How we can move, transition, use the infrastructure and their capabilities for formation of GST Appellate Tribunal. Third is the consistency, importantly, because there would be state bench and we all would be looking for consistency. Means there should not be divergent ruling or judgment by different state bench. And fourth important is place of supply. Of course, it is going to be on principal bench, but looks like and fear in the mind that principal bench should not be overburdened on the issue of place of supply. And what happened when the subject matter having multiple issues along with place of supply? Will it go to principal bench? That's what we have to really find out, wage and means. And last and foremost, we are all into e-mode. COVID has taught us how to work through remote places. So our GST Appellate Tribunal should be digitally equipped, technology driven, starting from e-appealing, e-hearing, and e-order. Then success of GST Appellate Tribunal will be seen as we are expecting. This is the first part which we are going to discuss in the e-job business. Now coming to the challenges. We have identified certain areas where we are finding challenges still in GST, and those are the submission as a constructive suggestion. I know, and let me tell you each one of you. Sanjay sir is one of the dynamic, and he's the person who listened to our voice. I'm regularly meeting him, and at all time he comes back and asks me, Bimal, where are the hurdles and obstacles? Please tell me. And today in National Conference, we are going to draw and jot down those pointers while discussing challenges. So those are constructive suggestions from our side. We will summarize everything. If I look at the challenges, the first point is cross-charge. In pre-GST era, we would be knowing stock transfer of goods, not chargeable to sales tax. But we haven't thought of that our head office is giving services to the branches or branch giving services to the head office. It is deemed supply in terms of entry to Schedule 1. And with the judgment coming from AAAR, Columbia Asia Hospital and Cummins India Limited, it is deemed supply. Issue is only on valuation. Rule 28 though provides that there would be open market value, like kind and quality, 110% of cost of provision or residue method. But second provision, which is very important, on which litigation started pan-India. And what is that second provision says? That if recipient is entitled for ITC, input tax credit, then value adopted by the supplier would be deemed open market value. Now, whether this value would be nearest to the 100% total cost, what would be this value? Can it be any value? So litigation has started on this point. So maybe we have to find wage and means what would be the outcome of this Rule 28 second proviso. But if I go to Rule 32 sub-rule 7, it is clearly giving power to the government. They can issue a notification for a specified class of service provider, where recipient is entitled for the ITC, that value would be nil. So that no dispute, no confusion pertaining to this entry to Schedule 1 transaction. But this Entry becomes more critical when we look at exempted sector. Education, healthcare, no credit available, and become more and more critical when we start talking whether salary need to be included in total overhead. And salary, as we understand, neither a supplier of goods nor supplier of services. So we are looking, and that's we are going to discuss today, and we will summarize our pointers and show, sir, we will submit our representation to you. Coming to the second point, corporate guarantee. In normal business parlance, holding company or director of a company giving personal guarantee to the bank for extending loan to the subsidiary company. Question is, any service provided or not provided? Entry to Schedule 1 deemed supply. Because supply of goods or services between related person or distinct person in the course of furtherance of business is a deemed supply. But question is valuation. Loan could be 100 crore rupees, 50 crore rupees, 10 crore rupees, but what would be the valuation when there is no consideration? Only guarantee is being given by the director. But litigation is also happening on this point. Third important one. At the PhD Chamber of Commerce, let me tell you, sir, we are proudly saying we are on the part of organized sector. We are advocating genuine and honest taxpayer. We are not for the tax evaders. And we have seen in the past quite obvious, I'm saying lot many has taken the fake registration, which is coming out. And lot many used to file their GSTR1, say for 10 lakh rupees, but actually it was 1 lakh rupees outward supply. So they were showing 10 lakh rupees to pass on the credit to the buyer, but paying the liability in 3B on 1 lakh rupees. So there was consistent mismatch in GSTR1 and GSTR3B. Look at from the government side. They are losing out the revenue. And they were doing so regularly and habitual offender, how they should be left open in the system. And they're the only person not allowing us to get the benefit of GST. Sometime we have seen that excess credit availed in 3B, but that is not getting auto-populated in GSTR 2A and 2B. But there may be different reason why it is not getting auto-populated when we talk about genuine and honest taxpayer. Sometime B2B supply is shown as a B2C. It is not getting auto-populated. Maybe GST number wrongly mentioned. It is not getting auto-populated. Intra-state supply is shown as an interstate or vice versa. It is coming but ineligible. Or supplier only paying the taxes through 3B but not filing 1, not getting auto-populated in 2A and 2B. So my twofold suggestion here. The first suggestion is, why so many scrutiny notices coming only when credit is not matching with GSTR 2A? Honorable Supreme Court in the case of Bharti Airtel has clearly said 2A is only facilitation. 2B is applicable from 1st January 2022. So these scrutiny notices are being issued in numbers. And second point, which is difference of 1 versus 3B, that the provision which is made applicable from 1st January 2022, this difference would be self-assessment tax and can be recovered even without issuance of so-called notice. Yes, these provisions are required against the tax evader, but only caution and precaution would be, it should not be used against the genuine and honest taxpayer. But one thing which I would like to highlight for the benefit of all, way forward in GST, credit is going to dependent on tax compliant supplier. You must know your supplier. And that the provision in GST, which is now being introduced, two-way communication gone with one way, that over a period of time, this credit which is disputed will not be there when you look at down the line from here, 6 months to 12 months. And what are the provision? Rule 59, sub-rule 6. If I'm a taxpayer, I want to file my GSTR1 for the current tax period. I can't file unless I pay the taxes of my preceding month to 3B. So taxes are being paid. 75 subsection 12 explanation. There will not be difference between 1 and 3B. Otherwise, it's self-assessment tax. Maybe we can make mistake once or twice, but cannot be regular. And the difference means self-assessment tax recovery. 37, I can't file my GSTR1 for the current tax period unless I ensure my preceding month GSTR1s are being filed. So that I'm filing one and credit getting auto-populated in 2A, 2B of my recipient. And section 39 clearly saying, if I want to file 3B for current tax period, I need to ensure I am filing my 1 first, and then my 3B get enabled. And there should not be mismatch. So these are the advantage will come. The next important parameter which we have picked up for today's discussion is advanced ruling. Sir, here is my suggestion. Advanced ruling, we thought of we would be getting certainty and clarity. The first challenge which we are facing that if I'm going for advanced ruling, I'm giving the feedback of trade. I'm giving the feedback of trade that advanced ruling we have seen it is not coming on legal interpretation. And we have seen number of, ruling coming pro-revenue. Reason is quite obvious because departmental officers sitting and they are deciding this subject matter. But the worry and critical part is divergent ruling from one state to another state. So binding effect of advanced ruling. And second, when divergent ruling, what will happen? Law has made the provision of formation of National Appellate Authority for Advanced Ruling in 2019 Finance Act. But yet it is not being formed. But there are certain other issues in advanced ruling like place of supply. Can I go for advanced ruling? Or maybe foreign trade policy or custom where IGST is one of the component. Can I go for? Or recipient can go for advanced ruling. So these are the parameters. And last and foremost in advanced ruling, time bound, which is somewhat missing. We are not getting within time. Next topic which we are going to discuss today towards challenges, anti-profiteering authority. It is being formed to ensure that commensurating benefit in terms of two items, that if there is a reduction in rate of tax or ITC made available, which is not available earlier, that should be passed on to the buyer. Objective was very, very good. It is to ultimate benefit the consumer. But the challenges which we are facing today, there are many cases pending before the authority, and now this anti-profiteering authority would be CCI, Competition Commission of India, from 1st December 2022. Time-bound closure, and second, what is the mechanism? How to calculate commensurating benefit is a challenge for the trade, industry, and commerce. Coming to the writ petition, which is the last component of my theme presentation. Yes, we are having dedicated panel discussion. So writ petition, without having GST Appellate Tribunal for last 6 years, we were all reaching to the High Court. And we're getting a lot of ruling on different perspective. The first question which comes in everyone's mind, whether alternate remedy is really a bar before approaching to the High Court. Of course, we are going to discuss in panel discussion, but food for thought. If there's a violation of principle of natural justice, fundamental right, or beyond jurisdiction, or when wires, the validity of law is being challenged, can't I go to the High Court even though alternate remedy is available? But what I'm going to discuss today, question of law versus question of fact, many dispute around, but I'm going to highlight 3-4 important points, sir, and which is worth noticing. We have come out with the periodical amnesty scheme, which is to benefit to the small taxpayer, either waiver of late fees or filing of GSTR 1, 3B. The one challenge which we are finding, the time limit to avail credit under section 16, subsection 2, clause D. So what happened in this provision? It is earliest of the due date of September for filing return under section 39, which is 3B, and which is now changed to 30th November, or date of furnishing annual return, whichever age earlier. Now, the challenge was, and which is in front of us, for 17-18, there was one-time increase 31st March 2019, but after that, there is no change in time limit to avail credit. Now, what is the legal dispute which is going on in the market? There was Gujarat High Court judgment, sir. And Gujarat High Court judgment was that 3B is not a return under Section 39. So what happened? Date of furnishing annual return would be the last date. This matter has gone up to Supreme Court. Honorable Supreme Court dismissed Gujarat High Court judgment relying on Bharti Airtel. But the problem is that in Bharti Airtel, the constitutional validity of retrospective amendment through which 3B was made return under Section 39 was never challenged under Rule 61, Sub-Rule 5. So this time limit, let's say if opportunity given through a amnesty scheme that I can file my 3B for the past period, but if credit is not available because of Section 16, Subsection 2, Clause D, Section 16, Subsection 4, which is the time limit provision which we are referring to. Now, in this given situation, we have to really identify what is the mechanism which we can provide to the taxpayer. Maybe for initial 3-4 years, where the challenge was. Coming to Section 16, Subsection 2, Clause C. Sir, this problem is throughout the India. If suppliers default for payment of tax, why credit would be denied for the genuine and honest buyer? Now, this is pan-India problem. Now, if you look at this provision from GST law perspective, many provision within the GST law is giving power to the officer to collect these tax from the defaulting supplier. But department normally comes to the recipient end and wanted them to reverse this credit, and that too along with interest and penalty. But I'm highlighting one provision, and you can throw some light on that. That Section 41, Subsection 2 got substituted from 1st October 2022. And as for 41, Subsection 2, which is a prospective clause, it is demanding reversal, but prospectively. Then for past period, there should not be reversal of credit. And in case there's a default on the part of supplier, it must be demanded from the defaulting supplier only. And then the judgment pre-GST era, like Supreme Court judgment, KK Industries Limited. We got Delhi VAT judgment from all the High Court, like Arise India from Delhi High Court. We got Madras High Court judgment, DY Bethel Enterprises. That in that judgment, it was clearly discussed when registration is being given to both the parties, supplier and recipient, why the recipient first to be investigated? Why not defaulting supplier? An investigation must start against the defaulting supplier. Coming to the next judgment of Honorable Supreme Court worth noticing, maybe 5 minutes, then I will sum up my theme presentation. Though it is coming from Karnataka VAT, and it is pertaining to genuineness of ITC credit avail, e-com, Global Coffee judgment. What is the genuineness? Just you have tax invoice and recorded the transaction and paid through bank channel is the genuineness? No, Section 155 put burden on all of us together that we have to satisfy that this credit is available to us. But what's the challenge, sir? Challenge is I'm having tax invoice. I received the goods. There's the eBay bill also. And taxpayer has taken the photograph of the truck owner and driver, and payment is made through bank channel, credit coming in 2A, 2B, and they are filing regular return. But it is being disputed, this credit is ineligible or fake credit or bogus credit. For the region, there may be L1 in the supply chain, to whom I don't know. They only, for them, I'm the immediate supplier. And preceding to me, there may be 4 or 5 players. There may be first party who has taken the fake registration, and he has only raised the invoice, and that credit is flowing, which is coming to me, but I'm genuinely availing the credit on the supply of goods received and then utilizing. And my buyer even looking at the transaction with me only. They can't see beyond that. Even GST is not permitting to see any transaction beyond me. So the problem is twofold. From department side, they have not collected the tax. And that credit is flowing throughout the supply chain. How this credit would be available? But this is the region that they are now saying this is ineligible credit, bogus credit. But reason for that, we could not implement automated GST return system, which we thought of initially, GSTR 1, 2A, 2, 1A, and yes, self-policing, which was never introduced. Now this challenge is coming. Having genuine and honest buyer, they are having this challenge. What is the way forward and mechanism for them? When I'm talking about litigation, and that too from the writ petition High Court, then in immediate recent judgment from Karnataka High Court that 21,000 crore notice got quashed on online gaming. This online gaming is a subject matter before GST Council, and Honorable Karnataka High Court has said, Rummy, whether played online or physical, with stake or without stake, it's a game of skill, not a game of chance. And they have quashed 21,000 crore notice at so-called notice level. So I was just, saying my word, whether alternate remedy is really a bar when we are challenging the wires of the provision, the law provision. And that is what this Karnataka. Last 2 points, sir. One is inverted duty structure. BKC footsteps. Now, Honorable Supreme Court judgment that credit this refund which we are talking about only available on input. No input service, no capital goods. But when we look at inverted duty structure, even input service also plays an important role. And there would be accumulation to that extent. My outward is only 5%, but inward is coming at 18% apart from input services. And to that extent, accumulation keep going. When we talk about survival for startup, so this accumulation will not give them working capital flow so that they can really start and do new business, new venture in India. And last and foremost, today's national conference is focusing on ease of business and challenges. Yes, we do agree challenges are there, but importantly, and which we must appreciate, and I will request each one of you, because when senior person like Sanjay sir is coming and listening to our voice, that is the first steps towards coming toward the trade, industry, and commerce. He must be complimented with big round of applause. And second part, we have to also strengthen our compliances. If we strengthen our compliances, quite obvious, we are contributing for the nation growth and development. It is our responsibility as well. It is not only for the tax department to work on, it is for the taxpayer to come forward and make sure they are tax compliant. And credit is now going to be dependent on tax compliant supplier only. So we have to be careful about. So with this, let me sum up my theme presentation, but I'm thanking each one of you for coming in such a large number and attending this national conference with a great success, and thanks to each one of you, and especially to Sanjay ji. Thank you very much.